Good morning. We will pay attention to the VAT on sales and VAT on debtors allowances. Brooke Shields is registered as a VAT vendor. VAT of 14% is included in the appropriate amounts. As soon as you see that they are registered for VAT, it means on all purchases you will be able to claim back the VAT, and on all sales and income you will have to pay VAT over to SARS. If we look at the first entry, sold goods to Ls for 1026. That means the total amount that he owes the business is 1026. So the account of the debtor must be debited with 1026 and the debtor's control will be debited with 1026. Included in that figure is VAT. So some of this money belongs to the business and will be their income that they obtained out of sales, and some of the money must be paid over to SARS. So if we look at the calculation to determine how much must go to SARS and how much must go to sales, we see that the total debt that they owe is 114%. Because they owe the money for the sales and they owe the money for VAT. And that 114% equals 1026. The sales amount that the business is entitled to that will increase their profits will be 100%. So 1026 times the amount that we want over the amount that we know, 114, will then give us the income for the business. So the income that will be recorded in the sales account and will also be recorded in the income statement. The VAT output will be 14% of that 114, and that will give us 126 Rand. So although the business must still receive the money from the debtor in the future, the business owes this 126 Rand to SARS because they're going to collect the money on behalf of SARS and they have to pay it out. If we look at the entry here, we will see that the debtor is debited with 1026. Sales income is credited with 900, the income of the business, and VAT output is credited with 1026, so that the debits and the credits are equal. If we look at the percentages, you will see that the debtors control is 114% account because it includes the money for the business and the VAT. Sales and all other income and expenses can only be 100% account. You can never include VAT in any income or expenses in your general ledger or in your income statement because the VAT does not belong to the business, it must be paid to SARS. If we look at the VAT output account, we see it is 14%. In the bank, again, it is 114% because the amount that must be paid to SARS will include the VAT, and if you collect money from a debtor, it includes the VAT. Okay, so if we look at the second entry, issue a check on 1 April to SARS to pay the outstanding VAT. So the business will pay the VAT to SARS and the bank account will be credited and the VAT output account will be debited to reduce the amount. So as soon as the money is received from the debtor, you will put it into the bank account to show that you've received this 126 Rand that the debtor owed you. But before you even receive that money, you have to pay it to SARS. So the business is responsible to pay this 126 to SARS every second month. And quite often this will happen long before the debtors pay their accounts. If we look at the third entry, there was a credit note issued because they returned goods. So I have to reduce the debtors control account now with a total 342 Rand. And just as we did in the sales, when we sold the goods, we increased the debtor with the sales and the VAT. If they return goods, we must reduce them with the debtors allowances to reduce sales and with the VAT output. We will do the calculation for this returns of the goods to determine the amount that will reduce VAT output and the amount that will reduce the sales. So in my calculation, the total amount that was returned is 342 Rand. That includes the VAT, so it equals 114%. Sales returns equals 100%, excluding the VAT. So 100 over 114 will show us that the business reduces their profits with 300 because the goods were returned. VAT output, 14% of the 114% will give me the 42 Rand. So I will have to credit the debtors with a total 342. I will debit debtors allowances to show that the income out of sales are now reduced by this debtors allowances. And again, this is a 100% account. It can't include the VAT because debtors allowances will also have an effect on your income statement, and the VAT does not belong to you. It is collected on behalf of SARS. And we will debit that output with the 42 Rand to show that we already paid the 126 Rand to SARS. We did not collect this 42 Rand from the debtor on behalf of SARS, so we can now claim this 42 Rand back from SARS. So what did we learn today? When goods are sold, VAT must be charged on the sales price. This VAT is collected on behalf of SARS and must be paid to SARS even before the debtors paid it to the business. When goods are returned, the VAT included in the sales returns can be claimed back from SARS because this VAT was not collected on behalf of SARS.